Hello children, today we are going to study the first chapter of class 11th accountancy, that is Introduction to Accounting. So the first concept is, what do you mean by accounting? So accounting is a systematic process of identifying, measuring, recording, classifying, summarizing, analysis and interpreting and communicating the financial information to the users. Let's understand it in detail. So first we have to identify the financial transactions, that is the transaction which affect the profit or loss of an organization. Secondly, we have to measure these transactions in terms of money. Thirdly, we have to record these transactions in the format that is known as journal. Then we have to classify, that is we have to group the entries of same nature at same place, which is being done in the format of ledger. Then we have to summarize, that is we have to present these information in the final accounts, that is the trading and profit and loss account and the balance sheet. And then we have to analyze and take out meaningful judgment and to show the financial position of the organization. And finally we have to communicate these financial information to the users. As per the American Institute of Certified Public Accountants, we can define accounting in other words as well. So here the accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money, transaction and events which are in part at least of a financial character and interpreting the results thereof. So this also means the same, all the 7 steps have been considered, but this is the other way of writing the definition of accounting. And these 7 steps, if you see, are the characteristics of accounting as well. Moving ahead with accountancy, so the entire body of the theory and practice of accounting is known as accountancy. Okay. Now, if you see, the first 4 steps were earlier in the traditional times were known as bookkeeping, and the next 3 steps are actually known as accounting in the traditional times. So you must be thinking that just now I told accounting means all the 7 steps, and now I am saying accounting only comprises of the last 3 steps. So yes, when a bifurcation or a distinguish between bookkeeping and accounting is asked, so in the traditional times, bookkeeping includes the first 4 steps, okay, and accounting involves the next 3 steps. So moving on with the difference between bookkeeping and accounting, as you can see, the first point, that is scope. So bookkeeping includes identifying, measuring, recording, classifying the financial transaction, that is the first 4 steps, and accounting involves the summarizing, analysis and interpreting the financial information to the users. If you see the second point, that is stage, so bookkeeping is the primary stage, this is the first step. After that accounting is done, that is the secondary stage. Objective, the bookkeeping objective is to maintain systematic records, whereas for accounting the objective is to ascertain the net results of operations and to communicate these informations to the users. Nature of job, so bookkeeping is routine in nature, that it is to be done on a regular basis, whereas accounting is analytical and dynamic, it keeps on changing and it is actually done at the end of the year. Performance, bookkeeping is done by the junior staff, whereas accounting is done by the senior staff or the chartered accountants, that is the CAs. Last point, special skills. So bookkeeping does not require any special skills, whereas these are required in accounting. Moving ahead with the limitations of accounting. So yes, one very important term which is being used here is window dressing. So as we have visited the malls and we used to see that in the stores, the owner of the store is showing the good quality products in the window or in the shelves, whereby this show the quality of the product which is being sold in that store. In the same manner, window dressing is also done in accountancy, whereby the accounts are manipulated to conceal the vital facts, okay, so that we can show the financial position in a better manner than the actual position. And because of this, what happened? We attract the investors to invest their money in our organizations. So in this situation, the income statement will fail to provide the true and fair view of the results of operations, and the balance sheet will also fail to provide the correct, true and fair view of the financial position of the enterprise. So this is one of the limitations of accounting. Moving ahead with the qualitative characteristics of accounting. So there are certain qualities which the accounting information should have, okay, which are useful in increasing its understandability and also provide a greater experience to the interested users. So what are those qualitative characteristics? These are 4 in number, that is reliability, relevance, comparability and understandability. So what is reliability? That accounting information should be reliable, it should be free from bias, it should be verifiable, okay, and it should be neutral and faithful. Relevance, the accounting information should be correct and must be available in time. It should be relevant as per the needs of the users, so that the prediction about the outcomes of past, present and future can be done, and also we can confirm and correct the previous evaluations and experiences. Understandability, yes, accounting information should be understandable easily, and it should be interpreted in the same sense as it is being prepared and conveyed by the organizations. Comparability, so accounting information should be comparable, that is, it should be made in such a manner that the same practices has been followed in different accounting periods, so that we can easily compare them, and the same unit of measurement should also be used. Now, who all are the interested users of accounting information? So there can be 2 categories under this, that is internal users and external users. So internal users are the owners, management and employees and workers, that we will discuss in detail. Like owners, why they are interested for the accounting information? Because owners have invested their amount of money, so they want to know whether the business is earning profits or losses. Management is interested because they have taken decisions, so they have to see whether their decisions are fruitful to the organization or not. Employees and workers, they are interested in the accounting information to get some benefits in the form of bonus, okay, because if the firm is working efficiently, the employees and workers must also be willing to get some bonus or additional benefits. External users, the first one, banks and financial institutions. So banks and financial institutions will be interested because they might have given loan to the organization, so they want to see whether the organization will be able to repay the loan in time or not. Investors and potential investors, these are interested because they want to invest their money in the business, so they want to see whether there is future prospects of that particular organization or not, and whether their investment will be safe or not. Creditors, creditors are the persons who have supplied goods to us on credit, so they are willing to know about the accounting information because they want to see our credit worthiness, that is, whether we will be able to make payment to them in the coming time period or not. Next, government and its authorities. Government is interested because government wants to collect taxes from the business, so they want to know about the results of the accounting. Moving on with the researchers. So researchers are interested because they want to utilize the accounting data in their research work. Consumers will be interested because they are consuming the products of a particular organization, and they want to know the accounting information because they want reduction in the price of the products. So if a company is working well, working efficiently, they will be asking the company to reduce the price of a particular product so that they can get benefit of economies of scale. Last one, public. So public at large is interested because maybe the public will be interested for employment opportunities in a particular organization, so they will be looking for the accounting information, that whether that particular company is working well or not, so that they can find good job opportunities in those organizations. Moving ahead, there can be two systems of accounting, that is double entry system and single entry system. In double entry system, we are recording two aspects of a transaction, that is one is debited, the other one is credited. Like for example, we are purchasing goods, so the goods is coming into the organization and cash is going out of the organization. So both these aspects are recorded in double entry system. In single entry system, which is also known as incomplete records, here only one aspect was recorded in the traditional times. They were concerned only with the amount of cash which is to be paid or which is to be received from the other parties. So when I say goods are purchased, they will be only interested at how much amount we have to pay to some other party. They are not recording the goods in their books of accounts. So this was actually that single aspect of a transaction was recorded, which is known as single entry system. So this was all about the concept relating to chapter number 1. Thank you.